If they were to raise rates sharply to stop the inflation, they would bring the whole system down, the whole financial system.
This week's specials with Miles Franklin Precious Metal Investments.
2021 Austrian Philharmonics for only $360 over spot. 2022 Noah's Ark silver coins, 1 ounce coins for $375 over spot, and 1/4 ounce coins for $245 over melt.
Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Innecco from the very popular Innecco64 YouTube channel. Mario, thank you so much for joining us today.
Oh, you're welcome, Elijah. It's nice to be back with you again.
It's great to have you, and especially on this day, Wednesday, December 15th, as we just heard Powell speak about their policy going forward. It seems like they're having a more aggressive stance now. They're tapering more aggressively, and they're also mentioning how they could be raising rates next year. Your perspective on why they're doing this? Well,
according to Powell and the guys at the FOMC, it's because inflation is running faster than they expected. They're dropping. Of course, they dropped that transitory message, and they've been proven wrong. So I think they realize that they're way behind the curve, and the markets are calling for tapering to be doubled, and that's what they did. They went from, I think, 15 billion a month to 30 billion from a month from January. I just listened to Powell a little bit during the press conference. He said they should end the tapering by the middle of March, and from then on they can start thinking about raising rates. So we've seen the movement in precious metals recently, and even right after the announcement at 2 p.m. Eastern time, gold and silver were smashed down as normal. And but if you really look at what the Fed is doing, they're not really that hawkish. They're still doing QE up until the middle of March. They're still not raising rates. And you've got CPI running at 7%. Or was it 6.9? I forget, but very close to 7%. You've got PPI probably running a lot more than 9.6% that we saw the other day. I think they're going to be proven wrong again. If they really want to stop the inflation, they have to stop QE altogether. They wouldn't need to taper. People seem to think you need to taper to start raising rates. No, all you need to do is to stop doing QE, and they're not doing that. I think the Fed has just bought a few more months, and this is not political or anything, but they've mentioned Omicron, that they're going to keep an eye on that could be a risk. Right now it isn't, but from what I see here in Europe, especially in the UK, even though it's the politicians, they're pushing the Omicron on their medical advisors. My view is that usually what happens in the UK or in the US happens in either country. It's that special relationship. So I'm not too convinced. The other thing that Jay Powell seems to have pushed a lot, from what I listened to part of his press conference because it's still going on, he kept saying, "Oh, the economy is so strong, and we forecast that it's going to keep growing like at 5, 6, 4%." But if you look at the budget deficit in the U.S., and this is not just in the U.S., it's here as well in the U.K. and all other European countries, budget deficits, I think, is running for fiscal year 2021, ran over 12% of GDP. Next year, where he expects, I think, the economy to grow at 5 or 4%, thereabouts, the budget deficit is forecast to be like over 7%. And if you just do a Google search, how to calculate GDP. The GDP calculation adds government expenditure. So if the government overspends how much it takes in by 7%, that means, in my opinion, that this growth he talks about is really not real wealth building. It's just a lot of government spending. And that's why I think prices are rising. That's why there are inflationary pressures, because we have a huge budget deficit. We have credit creation. And I think the horse is run out of the barn already, and it's too late. I expect to see prices continue to rise. I know the BLS will probably adjust the calculation of CPI. I'm sure they could fiddle around with that. And plus, the Federal Reserve, they like to look at PCE and they look at the core number. So, and I saw that they're forecasting as well that, core PCE or CPI is going to be like at 1.6% or something like that by 2023. I think that's just like a wishful thinking. I don't think the Fed is as hawkish as the market seems to believe. But unfortunately, the algorithms, a lot of people in the mainstream media, they don't see these things. They still give the Fed quite a bit of credibility, but I think it's wearing thin.
This is being reported as, the most hawkish the Fed has been in years. You don't buy that?
No, not at all. Because if the Fed was really hawkish, we've had CPI going up for the last 6 months at like over 5%. They would be already raising rates. They would have stopped doing QE. So the fact that they're still going to be doing QE until the middle of March, and the rate hikes, they haven't raised rates. All they've done is put little dots on plotted, their plot chart, and said, well, we expect 3 rate hikes next year. That's just talk. If you're really hawkish, so I'll give you an example of the other way around. When there's trouble in the economy, when the markets crash, for example, and there's a danger of recession, the Fed has in the past many times held emergency meetings where they've cut rates. And have you ever seen CPI at minus, let's say, 5%? I haven't. Their target is supposed to be 2%. I've never seen it run at minus 5%. But whenever you get a little trouble in financial conditions, as they call it, they will hold an emergency meeting and cut rates. So I think if they were really hawkish, they would have already held an emergency meeting months ago to stop QE and start raising rates. That's the way I see it.
Now, I know you were recently reporting about how gold and silver reacted the last time the Fed started to taper, and gold and silver actually bottomed, which was very interesting. This was back in 2015.
Yeah, I think if I remember well, December 2015 was the first rate hike since the '08 crisis. So it took about almost 8 years, and they raised rates a little bit, and they raised again in January. And then they stopped, I think, up until the end of 2016. And the tapering, I think they had stopped tapering by the end of 2015 as well. And I think the tapering started in the beginning of 2014. So it took about a year for them to raise rates a little bit. And then they really started raising rates continually from 2017, 2018. And then they had to stop, of course, in 2019. And I think the conditions then were easier to unwind the accommodation, mainly because the accommodation after the '08 crisis was a lot smaller in terms of trillions and all the programs. And also because Yes, there wasn't as much leverage in the system as there is now. The national debt wasn't at 30 trillion. Budget deficits weren't running in double digits. So right now, for the markets to think that they can basically do what they did, let's say they started tapering 2014, what the Fed did in 4 years, that they can do it like in the space of a year or two, much quicker. I think it's unrealistic. They could try it, but I think it will cause havoc in the financial system, in the economy. And as Powell says, financial conditions change the economy very quickly these days. And why is that? Well, because I think the economy is not really fundamentally healthy. It's all, a lot of it is based on credit and government spending, and free credit and money from the Federal Reserve. Gold bottomed because the Fed had a meeting. Their meeting was the 15th and 16th of December. So this time around was 14th and 15th. And on the 16th of December 2015, gold bottomed at 1,045. And we haven't seen that price since, right? So I think this afternoon it bottomed at 1750 right after the announcement. Am I saying this is it? This is the bottom? No, but looking back, there's maybe a good chance that it is. We'll have to wait and see. And silver is the same. I think it bottomed around 14 back then. We did retest that level a few more times over the years, but it hasn't really been substantially below 14 since the end of 2015.
And why is that? Because normally it seems like raising rates and tapering would be bearish for both gold and silver, but you're saying they bottomed really when the Fed started to raise rates.
Yeah, and tighten policy. Well, Rafi Farber, he's looked at back in 1977, for example, because all throughout the 70s, the Fed was very accommodative. And finally, by 1977, they started fighting the inflation. They started raising rates. And that was the year, actually, that gold and silver actually started catching a bid. They had topped in 1975, and then they had like a sideways market for 2 years almost, a little bit like we've had now. But from 77 to 1980, silver went from $7 to 50, and gold went from around 200 to 887 by January 2020. So I think how come it sounds counterintuitive? Well, I think because raising rates is also inflationary in terms of costs, because for economy that's basically running on a lot of credit and debt, if you raise rates and tighten financial conditions, the cost of servicing that debt goes up, and companies have to raise prices maybe to cover paying the interest on the debt. So, and the other thing as well is that I would say the financial markets are prone to more accidents when the Fed starts raising rates. If you look back at the rate rising cycles, they're always associated with the start of a recession. So maybe investors are not as optimistic, and they want to have a little bit of security in gold and silver. That could be the reason. And unless the Fed really raises rates above 6 or 7% in order for us to see really real positive real rates, I think the rising prices are not gonna stop, and the inflationary pressures are going to continue.
What you see going forward is that even though the Fed is reducing the amount of quantitative easing they're doing, we're still going to see this inflation, and we're not going to see really aggressive tightening by the Fed.
Not really. The only reason I think the markets are still buying what the Fed is saying is because they have a little bit of trust in them. But with their forecast for CPI, core CPI, they're trying to tell the markets, inflation is going to come down, and trying to keep yields, treasury yields down and bond yields down. But who knows? A lot could happen also till March, and they could reverse everything really quickly, just like they reversed their rate hikes back in 2018, 2019, and how they reversed. Actually, after tapering, they left the balance sheet stable until 2018. I think 2018, they started like unwinding the balance sheet, but then they reversed the unwinding in 2019. So we're not even close to unwinding the balance sheet. But yes, I don't think they will be able to be aggressive enough to rein in the price rises. Yes, the government and the Fed can tinker with all the statistics to make it look like there is no price rises or inflation. But I think people are still going to feel it, unfortunately. And that will be the bottom 90%, I would say. The people who have the least, in terms of wealth, a lot of the wealth is flown to the top 10%. It's the people at the bottom that are going to get hurt. And it's funny to see Jay Powell saying that he wants to help, workers and stuff, like the more common worker. But I think it's they're in the bind because the other side of the coin is if they were to raise rates sharply to stop the inflation, they would bring the whole system down, the whole financial system, and that would hurt like the poorest as well. So they're going to keep inflating and pretending that they're doing something, and they'll fudge the numbers a little bit. And the markets, Wall Street will keep playing along because the more inflation there is, the more debt there is in the system issued, because the debt, the money and credit is debt these days in the fiat currency system, and the more fees they get. I just saw that JP Morgan and Goldman Sachs are going to pay massive bonuses to their bankers. And why? Well, because they did a lot of deals, because they get this credit for nothing, and they can finance whatever kind of project they want. Are they really good projects? Maybe some are, but a lot of them will probably just be malinvestments, as the Austrians call it. But they don't care. They're lining up their pockets.
You mentioned how if the Fed does really aggressively tighten, then this could spell disaster for the financial system. We're seeing amid the double taper, you could call it, the stock market actually rally, which I guess kind of makes sense because this wasn't too much of a surprise. It seemed like the Fed was going to act this way. But your perspective on how the stock market is reacting?
Well, I just see now that it's actually picking up quite strongly. Maybe Powell said something dovish, because it's up 328 points, the Dow. Before we started this interview, I think we were up not even triple digits. I see that gold and silver now are up on the day as well, which is interesting. Or maybe investors and market participants have realized that the Fed's still pumping the system with QE, and that 3 months is a long time in the kind of world that we live. You look at the UK here, what's happened in the last couple of weeks with this Omicron. The whole sentiment, economic and financial, not to talk about politics as well, it's shifted quite markedly. Tomorrow, the Bank of England is probably not going to raise rates. They were expected to raise rates in November, and they sat on their hands, and that was a surprise. But now, in the last couple of weeks, it's all changed. They probably won't raise rates tomorrow, and even the IMF is giving mixed signals. They said, the UK should start their furlough scheme again because of Omicron, and at the same time they said, the Bank of England should raise rates. So it's very confusing, and as I said, it can change in a couple of weeks. Even Powell said that. So yeah, it's a long time, 3 months now in this environment, and it looks like they're making a policy as well. Even though he mentioned that Omicron didn't impact anything, but he did talk a lot about Omicron and Delta. So it looks like monetary policy now is based on people getting ill or not, which is quite funny, I would say.
It's definitely very interesting. And one thing you mentioned how, the Fed can change course. Even Powell himself said these 3 projected rate hikes in 2022. He said specifically that that's not actually a policy decision. It's just what they're looking for in the next year.
Yeah, I heard that too. He said it's what each member of the FOMC feels like they'll have to do if everything remains as they are. That's a big if, and I think also we need to look at the political side, because I think there's 4 spots to be filled on the Federal Reserve Board of Governors, and the people on the Board of Governors, they always have a vote at the FOMC. So I'm sure that the current administration will probably try to nominate dovish people. Politicians always like doves.
In your perspective, as we wrap up this year, where precious metals have been, and if you're looking, and then also for the next year, where you see them going in 2022?
I think people probably expected precious metals to have done better this year. There's still, I guess, a few trading days left, maybe 10 trading days. I don't know. But it's difficult to say. I mean, I like to say, precious metals are going to be higher next year, and hopefully they will be. But who knows? At least it's not going to change my philosophy of trying to save in honest money, gold and silver. But I think there's a good chance of precious metals doing well, especially in relationship to what the Fed did today. They changed course, supposedly. And I think they have. They have turned a little bit, even though I still think it's very dovish. And so in terms of price, it's difficult to say where precious metals are going to go. And I think you have to look at it in the long term. I think since the year 2000, in most major currencies, gold and silver have averaged 11% gains a year. I guess this year we need to be at 1900, I think, to end the year unchanged. So yes, it hasn't been a great year in terms of appreciation versus fiat currency, but I don't think the fundamentals are getting any better for the fiat currencies. So I don't like to put a target, a price on gold and silver, but if I had to forecast something, if we're going to have a good year, I would see it making new highs, because I think gold needs to break like 1830 or 50 to really accelerate. And of course, some of the bullion banks, they always come out with their forecasts, and they're always like very bearish. I think Credit Suisse yesterday said they're seeing gold at 1670 next year. Anything's possible. But the other thing I would say, the premiums are still really high. For silver in the UK, you have to pay at least 20% premium. That's before the VAT. And gold maybe 5 to 7%. And I don't think that's going to get any better.
That's very interesting. And that physical premium is key. And we've seen an increase, especially since the beginning of COVID, where there's been so much really unprecedented demand for physical gold and silver. The premiums have risen, which then kind of, there's the question of, well, what is really the real price of gold and silver?
Yeah, that's a really good question. And I forgot about Basel III as well. I think from January 1st, the London bullion banks, who really are instrumental, and by London, I don't mean just British banks, but all international banks based in London, they're going to have to, if they don't want their balance sheets to look bad, they will have to follow the rules of Basel III, and that could curtail a lot of the paper games we see in gold and silver. So that's something else to look forward to, even though I always tell my viewers that the reason to hold gold and silver is not because of Basel III, but it could have an impact. And the other thing I would say, today Russia announced that they have made an agreement with China to have their own set up their own financial system. And I think that's very significant, because if it wasn't ready, they wouldn't have announced it. And now I kind of understand why they've been buying a lot of gold, and other countries as well, like Brazil, Singapore, and even Serbia repatriated all its gold. And they said that they're going to keep buying gold. And Serbia is an important part of the European arm of the One Belt, One Road initiative. So yeah, there's loads of stuff going on next year. Plus, we don't even know what's going to happen in terms of this COVID crisis. I think there's still, unfortunately, a long way to go with that.
All right. Well, Mario, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where everyone can find you online?
Yeah, last thoughts. Be patient, especially if you're younger than me. You've got plenty of time. Be patient. Live within your means. Nothing really too that you need a degree in physics to accomplish. And the other point is that, you can find my videos on Innecco64 on YouTube. I also am on Twitter, Innecco64. You can find also Innecco64 on Facebook.
All right, Mario, once again, thank you so much for your time, and God bless.
You're welcome. God bless, Elijah. Take care.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price, with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.